Good evening, Trade Flare family. Welcome back to the nightly breakdown, where we break down what happened today in the stock market, as well as give you an idea of what we're looking at into tomorrow. Now, before we head over to conduct a technical analysis of the SPY and 5 stocks, let's look at some key points to get a broader view of where we stand. So the first key point I want to keep my eye on is this infrastructure deal that has been made. In the news today, we saw that Biden and bipartisan senators reached a deal on a $953 billion infrastructure deal, and no one was really expecting that we would see this deal come about so fast. That's why you saw those infrastructure plays, the industrial plays, the banks start to go and really start to gain back some of those losses that we saw last week. As far as the bill goes, a lot will be spent on transportation, a lot will be spent on roads, bridges, major projects, a lot will be spent on like freight trail, public transit. One thing is 15 billion will go towards electric vehicle infrastructure and electric buses and transit. And that's actually a lot lower than what Biden first proposed. So we really saw the industrial sector start to pop. We saw the banks, Caterpillar, US Steel. Overall, the Dow components got a lot of steam off the news. We let everybody know in our Discord and played the US Steel for tomorrow. Also watching Caterpillar and Honeywell for this. Next, I want to talk about the banks, and they also benefited off of this deal. And they also had something called a stress test after hours. This is where the bank does a bunch of tests to see if the banks would last through a huge recession. And they actually passed. So if we were to go and sell off 50% right now on the stock market, the banks would have enough capital to land out in a severe recession. And with the stress test passed, this puts a lot of eyes on the banks. The financial sector as a whole has been killing it, has been bouncing off of those lows from last week. So we've seen a little bit of a pullback. With everything factored in right now, banks aren't overvalued. So I expect some money to be flowing into these banks off this news tomorrow, especially watching Goldman Sachs, Bank of America, Morgan Stanley, JP Morgan. Goldman Sachs had the most pull today on the financial sector. They also had some recent news with the NFL, so watch out for that. So now to our last key point, which is, as always, our sectors and our indices. And the small caps were leading all of the indices today, with the Russell up over 1.4%, with the Dow right behind. The Nasdaq and the SPY were both matched up right around 0.6%. As far as sectors go, financials, communications, energy, and industrials were the leaders. On the downside, we had utilities, materials, and consumer discretionary. Utilities was the only sector to close negative. Tech, healthcare, and consumer staples were right in the middle of everything. As you can see, growth was lagging value, unlike yesterday. Those banks are bouncing, which those are the value leaders. Those have been leading the way, all of the value rotation. So see if this has any effect on those growth stocks. We have been hearing more from these Fed members, and they've been making more hawkish statements as they go. And there are a few Fed members that have made some short-term hawkish remarks that have shocked the market, so watch out for that. Tomorrow, I'm really watching industrials, energy, financials. So now that we have a broader idea of what to expect, let's dive into our analysis, starting off with the SPY ETF, which tracks the S&P 500 index. And looking at the daily here, looking at this candle structure, we have a really tiny range. We gapped up and we spent most of the day chopping around up at all-time highs. And as it looks right now, short sellers are probably exhausted. They tried to take this thing down yet again today, but we still have a lot of buyers in the market right now. There are a lot of things going on. We've got earnings right around the corner for a lot of stocks. We had really impressive Nike earnings overnight. We could start to see some positioning for this upcoming earnings season. So I do think we could break out. I think we could go a lot higher, especially with the banks getting all that steam from the bottom, with tech running like it has been. So I definitely think we could go higher. So now that we know where our broader market sits, let's dive into our watch list, starting off with Disney. And today we got the break of this long-term resistance trend line, which was also the top of a recent bull flag. And now we're looking at that 50-day moving average. We can break that. My first target's these highs at 181. I like this one. I like the candle. I like the volume. I like where it's at. I like the company. So keep your eye out on Disney for the next few weeks. Next up on the watch list is Goldman Sachs. This is a financial services company, and they're a beast. They led the S&P today. Like I said, their name's also been in the news a lot. If you look at this pullback, it was right to the 382, meaning this thing has pulled back. It's in a beautiful uptrend. It could definitely go higher. Big volume on this green continuation candle. First, we're probably going up to 377 before we head up to all-time highs and higher. So watch out for Goldman into the rest of the month. Next up is Jumia Technologies, ticker symbol JMIA. This is like the African Amazon. This is a big candle with a lot of volume that's breaking out of a bull flag. It's also forming a nice third head for this reverse head and shoulders. The neckline's at 33.80. That's my first target. If we do break out of that, I think we could go all the way up to $50. We've seen this thing move. It's one of those growth companies that's been popping, so watch out for this one. Next, over to member suggestions, and the first one up is Bank of America. And like I said, I like the banks because of what we saw with the stress test pass. I think we'll see a lot of volume in trading within the banks tomorrow, and I think that this Bank of America play is a good one. Looking at candle structure, green continuation candle. This one still needs to take out the 50-day and the 20-day SMA. If we take out the 50, I think we can go all the way to $42. So definitely keep your eye on Bank of America. Next up is another member suggestion, and this one is Smith & Wesson. This one recently got a bunch of hype off of a increased dividend and a bunch of buyback news. Now, how high will this thing go? Since March, it's up 100%, so probably not much higher. This is a value play, and looking at the recent range that it already broke out of, this last move is already pretty much doubled that. So I'm not really interested in taking any plays on this. I think there's a lot better opportunities in front of us, but if this ends up being a short squeeze play, I will regret those words. So that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, or if you learned something, make sure you hit the like button and don't forget to subscribe so you can get notified whenever we post any live or educational content. If you're looking to join our team and be surrounded and motivated by our online community of traders and investors, as well as gain access to trade signals that let you know whenever we make a trade, check out the link in the description below to join our Discord, gain full access by upgrading to TradeFlare Pro, get half off your first month using the discount code TFPRO2021. But don't be mistaken, we are not financial advisors and none of this is a recommendation. The stock market is risky and you could lose money, so use the information inside these videos at your sole discretion. And as always, you cannot forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.